Welcome to the Future of Real Estate, Bold Moves and Real Estate Realness with your hosts, Stacy Kaplan and Aaron Stumpf. We are here today to unpack some unfolding news regarding down payment assistance programs that are going away. We're joined by a very special guest today, Austin Lamson of Origin Point Mortgage, who is an expert in her field and is going to help us dive in and understand what we can do for our buyers.
Could you imagine getting your family into contract on their first home only to discover that the down payment assistance program that you thought you were going to use evaporated into thin air? I can only imagine the shock and sadness that would come from a situation like that. So, we're going to talk about how to ride through this period of transition. I think today Austin's going to share a lot of tips and information with us. And so before we dive into that, I'll just explain that a couple weeks ago, the Federal Housing Finance Agency, which is called the FHFA, and that's an independent federal agency that was established in 2008 to regulate Fannie Mae and Freddie Mac, among other things. So there's a new director of the FHFA, Bill Pulte, and he directed Fannie Mae and Freddie Mac to terminate its special purpose credit program. That program allowed lenders to offer support like down payment assistance, closing cost assistance to borrowers in underserved communities. Now that it's been cut, we're looking for alternatives and trying to figure out, as the dust is settling from this, what to do. So that's why Austin's here to help us unpack all that.
Austin, what can you share with us to help our buyers?
Ladies, thank you so much for having me today. People always say, where are rates going? I said, look, it's really about policy. Policy is the most impactful thing when we talk about home ownership, when we talk about rates, when we talk about programs, when we talk about how people access money to have housing stability in this country. And this state is very expensive. What you do at the CAR level, the NAR level, which for those that don't know is the California Association of Realtors, the National Association of Realtors, they're really bringing these boots on ground, and this is a huge impact. So policy, I want to back it up a little bit. We got to remember policy decisions change all the time. We're talking loan level price adjusters, how your credit score, your down payment impacts your interest rate. I think it was in 2023 or 21, the FHFA actually was told by the Federal Treasury Department, hey, we don't want to see second homes and investment properties. So those rates went up, right? So these are all policy decisions based on what they consider a risk pool. And today we're seeing Home Possible. We're seeing a couple different programs really start to be gutted, for lack of a better term. The first thing we have to know is these are always going to be changing, and we have to know that local municipalities, whether it is Cal HFA, the California Housing Finance Authority, right? That's a state concept, whether it's Chenoa Fund, that is a more national concept. There are a lot of different down payment assistances that are still out there for people. And not only that, we're seeing that private market come in and want to help people do 100% financing, 95% financing. But I think some of the biggest concerns that we're going to be facing now is the tumultuousness of the market. So what do we do about it? I mean, Aaron, have you ever had a client call you and say, my money's not going to be there? Or have you ever had to deliver that like their loan program isn't that like anymore, like doesn't exist?
Oh, yeah. I've been on the giving and receiving end of that news, whether I'm representing a buyer or representing a listing where the buyer was using some kind of assistance that then was getting cut. That's horrible news to receive when the ability to purchase a home for your family is at stake.
So, as a lender, I think the most important thing we can do is remember that we're professionals. The reason that you have a professional is that there needs to always be a plan B and possibly a plan C. I can speak with Stacy. We recently had a transaction maybe 6 months ago where the client was doing a first and second mortgage, but because of his nationality status, the second mortgage didn't want to actually close, right? So, we had the plan B. So, what do you do as a buyer? What do you do as a lender? Well, again, we've got to understand this small box to fit into on these. It is a very small box. And we're not talking about every loan. We're talking about specific programs that are related to how much income you make. What area are you buying? Are you a first-time home buyer? Are there different assistance? We're not talking about every program under the sun, What we're talking about is making sure that people understand that if you're looking to use some of these, they are sunsetting fast, and you have to be in communication, and you have to always have a plan B. I know that's maybe not what everybody wants to hear, but I think that instead of looking at it as a frenzy of how can I use it now, we have to have a calm, cool, collected manner. What are my opportunities? What are my risks? Is that property that's coming on the market, is that professional realtor representation finding me something that fits into plan B or plan B? And that said, that we move quickly. But you also have to remember that rates are starting to drop. It also means that other buyers are coming back into the market because they feel that they can qualify or they can qualify more. So if you're someone out there and you're looking to be like, hey, what are my opportunities? This is a great program. I've talked about to my lender, I've talked about to my realtor. I really want you to focus on, is this property that's coming on the market, does that meet your long-term needs, that housing stability needs? And if so, lock it down quickly. Because if you don't lock it down and you don't reserve these funds, if we're not locking these loans, because when we lock a loan, we say, hey, take that money out of the market for me, hold that money for me, it's mine, right? If you're not doing that, you're not going to be in the game. You're going to have to look at plan B or plan C, which may have some amazing opportunities for you. So I think that education and heightened communication is key when we're talking about these. I do think that I will say it is a disservice because we have mandates to lend in this country across different platforms. This whole AMI, this average median income, was created to assist people that weren't just making a gazillion bucks, right? That we're taking census tract data and saying, how do we serve different portions of our community that need to have that stability so that they can be good at home, so that they can be good at their workforce, because our workforce is in need of that stable housing, which is why I still do this.
Yeah, those are all really good points. I mean, I think what I took from what you were just saying is that these programs are always in an ebb and flow of availability. So having that plan A, plan B, plan C is really important. I think it's interesting that, special purpose credit programs, I was doing a little bit of research, and the Urban Institute just last year was talking about the increase in the usage of these programs. Now that there's a hole created by pulling back this particular program that's been in existence for quite a while, what do you see as an alternative that borrowers should maybe be looking at specific to, replacing special purpose credit programs?
Well, again, there's going to be there's going to be these types of things as an individual level. Like I'm in Santa Barbara, we have the housing fund for Santa Barbara, the housing trust, I should say, which is part of the fund for Santa Barbara. All the funds, all the housing, all the trusts, right? That's creating second mortgages for people. Ventura County has their own down payment assistance. The city of Lompoc has their own down payment assistance. But any one of these do run out of money. It's important to know that this isn't your normal, like, program, and they're created with buckets of money, and when that bucket's full, it's okay. So I think you're going to see different types of alternative loans. We need to be cautious of that and educating our constituents around the pros and cons. But I think what we're going to see is the private market step in a bit. But what it really, really means is expect that money is going to get a bit more expensive.
Thank you, Austin. Everything you just shared with us really underscores the importance of working with a lender who knows what they're doing and
Yes.
has that plan A, B, C, and can be the one that comes in to save the day. And I've seen that with Austin on several occasions. It's so important because we all work as a team and we have to be ready for the changes and be flexible and work together to bring a successful closing. So thank you for all of that. What can realtors do to assist with this
That's a great
process?
question. Yeah. So first and foremost, gone are the days when we look at realtors as just somebody that opens the door and turn on the lights. Like that's not truly serving. Like a bot could technically do that. Your realtor is your advocate. They are your advocate in the marketplace. They are your advocate at the state and national levels. What they have to do is constantly educate themselves to what's available out there. And what they have to do is talk to their association of realtors of what that advocacy is going to be doing. I had the great honor and pleasure of serving on our board in 2013 or something like that, right? And just really seeing the behind the scenes of the education, the collaboration, and then we take that to this level and this level. So realtors, educate yourself, ask questions, get involved with your association. What are you going to do if this is the only opportunity for that client to buy the house? What are you going to do to get them in that property, right? And make sure that that's the right one for them.
I know I speak for both of us when I say that, we've gone to the mat for so many of our clients to try to, not only just get them into the property, but fight to keep that transaction together and close it in the best interest of our clients. So yeah, I mean, that point is well taken. And I really liked what you said about the advocacy piece, because I can tell you that, at the California Association of Realtors in particular, a lot of the conversations we have will be about funding down payment assistance programs, how to make homeownership more attainable. I know that's something Stacy's very passionate about. It's a conversation that is a continuous drumbeat for us.
Truly, it goes on and on. And to one of your points, Aaron, the California Association of Realtors does offer home buyer assistance with mostly closing costs, but some down payment assistance. That's through the Housing Affordability Fund, HAF. What's incredible about this is it's funded by realtors.
Wow.
Realtors contribute and give back to help the clients that need it the most. If you're interested, I think I'll put a link here on our channel, and also talk to your realtor, ask these questions, find out what's out there for you. And there are far more resources at the state and local level at this point than national. Would you agree with that, Austin?
Oh, 100%,
Okay.
100%. And frankly, as it should be, right?
Mm.
Like I'm from Louisiana originally. The needs there are very different than here or in Portland, Oregon, where my parents live. It should be at a more regional level. However, I do think national support and guidelines, they need to be there to back us up. That's how it works, right? We start here and then we branch out. So thank you, ladies, for your leadership to help make that happen.
Well, thank you so much for helping us understand what's going on. And I want to go back to the very first thing you said: be calm, be professional. Start there, take a breath. Turn to your professionals, turn to your lender, and turn to your realtor and find a path forward if this is happening to you right now. So thanks again for joining us today. We look forward to seeing you on our next episode. Huge thanks to Austin. You're just amazing. You have so much knowledge, and we appreciate you for joining us today.
Yeah, very grateful, ladies. Honored to serve.
All right. Thank you so much. And we'll see you next time.
Bye.
Goodbye. If you found today's episode helpful and insightful, please hit the like button and consider subscribing.